Good afternoon, everybody. Welcome to the Trader Merlin Show. It is your Thursday edition, Stimulus Thursday, as the topic du jour. As you can see from the picture and graphic we created using AI, I said, give me a syringe with a whole bunch of money inside. I tried to get to be injecting the U.S. economy and markets, but I couldn't get the graphic to work out right. So we just got stimulus injections is what I'm going to be talking about today. It's funny, coming on the heels of yesterday's thumbnail, which was more pain ahead. I still actually believe that is going to be the case, a little bit more pain ahead for our markets. However, it's hard to ignore when all of a sudden they just put huge amounts of capital into our markets in causing a wonderful pop to the upside for anybody who might be long. Works good for a lot of the positions that I have, although not everything is rosy for me today. So let's talk about what happened out there. I'm going to start things off by going through our top 7, and then I will go into the stimulus actions which caused all this, and question is, are they going to go up even more from here? So here's our starting point. We'll go to gold to start things off, which is down 0.37%. Really what you have today is just a little spinning top, which typically will lead to a reversal pattern here. So we're kind of waiting to see what happens with gold. Even though we've had a wonderful rally for the past 6 days, I'm still expecting it to hit 2,000 here relatively soon, although the hesitation on today's trading, certainly the stimulus didn't help this gold at all. Looking at crude oil, which is your next one in positive territory, and actually pretty big in positive territory. You had 0.98%. Remember, we broke down below the yellow box yesterday and did so with conviction, but we started to rally back up, and I was kind of like, all right, will it hold? Well, for anybody who's continuing to hold their bearish position in crude oil off that breakdown from that demand zone, doesn't look great for you, right? You have a lot of indecision that happened out there today in crude oil. You can see that by this long bottoming tail and topping tail, but ultimately opening and closing right about the same. So if I had to put a wager on which way this one's going to go, it appears to me that you would see this more likely move back to the upside, maybe retest that breakdown level, which is right around $70.50 for crude oil futures. But that's what I see from a technical perspective on crude oil. Continuing up this steep positive gain ladder, Dow 1.27%. Technically, though, nothing. All right, you've got 5 days in a row of just chop sideways, real big candles, but not a lot of clear direction. So great if you're long the YM or Dow. Otherwise, I don't see any great setups here forming from that one. Russell 2000 is 4th place, exact same picture, except this is only a 4-day consolidation versus the Dow's 5-day chop. Russell 2000 was up 1.45% today, closing at 1787. And again, the longer this does this, the more likely it's going to look like an inverted flag formation. For those who might not know what that is, it means you have this big impulse move down, and then you have kind of maybe more of a pennant formation, really, where you have prices doing this, and typically that leads to a breakdown the opposite way. So a lot of ways to chalk up and draw on this chart, but really it's a wait position for me. My bias is actually more to the downside on this one, but we'll have to wait and see. All right, podium time. Getting to the S&P, which is up 1.83% today, coming right back into a supply level at 4,000. You can see we closed at 3,997. So this is a spot that for me for tomorrow morning, I'll be watching this and see if it actually does start to move down a little bit. I think today might have been a little bit of a greedy stock, or not stock, but a greedy day. I think a lot of people are like, oh, well, maybe I'll just jump on this wagon. I just don't see it being the breaking to new highs type thing. So we are at a good supply zone here on the S&P. Keep your eye on that one for tomorrow. That's 3rd place. 2nd place, B to the T to the C, Bitcoin. Similar picture. You have kind of a spinning top formation, which is really not a lot of movement overall, even though it gained 1.45% on Bitcoin for the day on the futures market. Hey, I'll take it. Give me some more upside in Bitcoin any day. And finally, there's your NASDAQ 100, the stellar standout. You had some huge moves in Google and Amazon. A lot of those FANG stocks really vaulting the NASDAQ higher. I guess the belief is that more of that money that's pouring into our financial system right now might be headed back into tech stocks or give more of a tech boost. Notice where we are, though. On that NASDAQ 100, we're coming right back into this previous high. Now, the high we had back on February 2nd, which was definitely not the all-time high, but certainly a pivot high, is right around 12,959. So keep your eye on that one. We are currently at 12,710. And to me, I don't know. I'm kind of finding it a little bit hard to believe in all the hype and hoopla that this is going to be just such an amazing, amazing thing. So, okay, we'll see how it all pans out. So, obviously, you guys know what happened that caused this. Step number one was Credit Suisse was about to have a meltdown, and they basically turned to Big Daddy and were crying and say, "Daddy, please help me. We're gonna die. We have all kinds of problems." So the Swiss National Bank says, "Okay, we'll stop making chocolates for a second, and we'll bail you out." So $54 billion were pumped into Credit Suisse, and basically saying, "All right, we'll save you from imploding." Which, honestly, if you look at that price chart we talked about yesterday, let the damn thing implode already. I mean, Credit Suisse deserves to implode. Here's the chart of CS. Now it had a big pop up today to start, but gave a lot of that back. I don't know. This looks like trash. Anyway, let's move on from Credit Suisse to the other bailouts that happen. So obviously, Credit Suisse is going to have an impact on our markets, just the global financial system. But obviously, I want to go and focus on the US-centric stuff. And the one that most people are focusing on is First Republic Bank, which got a nice bailout of $30 billion. Now, what makes this one interesting is it wasn't a government bailout. It wasn't the FDIC or the Treasury Department stepping up. It was member banks. So led by the two that I sold puts on last week, which were JP Morgan and Bank of America. $30 billion put into First Republic to keep that one from failing. Now, it's funny if you read some of the talk track, it's like JP Morgan and Bank of America and 11 other banks did this because they wanted to help out a fellow bank and stabilize the system because they have faith in our financial system. No, I think it was done because if First Republic went under and we have another major bank go under, the ripple effect could bring down JP Morgan, Bank of America, and a lot of these other banks and create a much bigger banking contagion. So they're like, well, crap, we better help out our friend here or we're all going to get all drown on this one. So I don't know. I wouldn't call it the altruistic, friendly, everything great. I look at it as more of like an oh crap kind of moment. We better do this or we're all going to get hurt. Ready, guys? Let's all band together to bail this buddy out, even though it may have been an enemy, may have been competition. So what? $30 billion. So in 2 days, you've seen $84 billion come into the financial markets. So I drew this picture up because if you take a step back and think of what put us in this position in the first place, why did we get to this much higher inflation than expected, a much higher inflation than expected environment? It was because of the printing of money. And in this situation, it's like we've been doing fairly decent at controlling inflation. We've got it down to 6% on the CPI numbers. Your PPI numbers looking even better. Unemployment's really low. GDP, well, that's still a wild card. But all in all, things are looking rather good. So if the Fed continues to raise rates, that puts more pressure on the economy. As you print more money, you start to undo some of the effects of inflation, the inflationary tactics that the Fed has been implementing. What do I mean by that? The Fed, of course, has been reducing their balance sheets, removing money supply from the economy in order to, obviously, remove money and drive the dollar back up. Now, in that process, that has had an impact on inflation. Obviously, inflation was over 9%. Now we're down to 6%. So everybody's saying, hey, good job, Jerome Powell. Keep doing what you're doing. But now you're pumping in $84 billion in 2 days. That could have the inverse effect. And some of those numbers, which look so rosy and wonderful, might start to go the other way here based off that money coming in. So kind of, damned if you do, damned if you don't. If you don't bail out these firms, we have a much bigger implosion and things get really ugly for a while. Or you bail them out and you postpone that pain further down the road. So the reason I chose a needle here is typically when you go into the hospital for, I don't know, some major ailment and you're in a significant amount of pain, as our financial markets are, they'll inject you with some good stuff. Maybe get some propofol, some heroin, something like that, just to keep your pain subsided. And maybe that's what we're in. At least that's what I believe. We're in a situation right now where this is to keep the pain from manifesting into those other market segments. Obviously, the financial is the main one. But my question is, and it's almost rhetorical, I don't know the answer to this thing, is what is the impact of this going to be going forward? How bad is this going to be for our banks? If all of a sudden we can look at all of our financial banking system and say, you screwed up, you screwed up, you screwed up, but we'll bail everybody out. No one has to pay any penalties here, no remorse. Everybody is good. As Liz says, kick the can down the road, the usual solution. I agree. Kind of unfortunate that it's happening that way, but as Americans, you kind of have to look at it as a positive thing, right? Because if you don't do this right now, I think this week could have been an absolute bloodbath. If they didn't bail out Silicon Valley Bank, and I'm going to say it was Silicon Valley Bank, because Signature didn't need a bailout. New York regulators said that the reason that they stepped in and took over Signature Bank was because of lack of confidence in the management of that company. It had nothing to do with the financials, and the lack of confidence comes from that bank was a major onboarder for crypto. Again, an attack on cryptocurrencies and digital assets by shutting down a bank and using that under the guise of, oh, they had financial problems. The regulator itself said that this is because of a lack of confidence in the management team. Wow. So they can just come in there and shut down a bank for that because they don't like who they're doing business with. I talked about that this morning in my Crypto Investor Live program, and it almost feels like, and I know this going to come across as very wrong, but it's almost like persecuting somebody because of what they believe in. So it's almost like telling a bank, hey, you can't lend to Chinese customers. Why not? If they have good credit, they got all the requirements that the FDIC and the Fed has set for these customers. Why should you tell me I can't lend to them? They're probably a great investment for me as the bank. Very safe. I've looked at all their financials, their credit report. They're great. Why do you tell me I can't? And that's exactly what the FDIC has said is no more crypto for these banks. Now, if you also saw the auctions that were going on, the auction for Signature Bank is going to happen here very shortly by Friday, and also for Silicon Valley Bank. And the FDIC has said if you buy Signature Bank, you have to discontinue all crypto business if you take over Signature Bank. Wait a minute here. Blows my mind that we can actually have regulators go in there and say, nope, no business with that type of company. We don't like that company. So again, my big argument or my talking track for the next year until we get to 2024 and I can actually vote for some elected officials that will support digital assets is talk to the people that are in power, talk to your senators, elected officials, and make it clear that this is bullshit to shut down a bank because they're involved with crypto. It drives me absolutely crazy. Anyway, yeah, right, Kev? That takeover of Signature Bank was one of those, well, wait a minute, what? Because there was this big fear and everybody right now is thinking banks are going to collapse, it was the perfect time for regulators and FDIC to step in there and go, let's take over Signature now. We already got rid of Silvergate, right? Silvergate's done. Let's take over Signature Bank and get rid of the major crypto banks out there. Absolutely mind-boggling to me that there's not a lot more uproar over this, specifically when the FDIC has said in their text, if you're buying Signature Bank, you must discontinue all crypto activity. Wow, mind-boggling. Anyway, sorry, my soapbox is on, and when I, sometimes I love my country and I have faith in where we're going, and other times I just shake my head and go, man, you're killing it. You're thwarting innovation, right? Your totalitarian dictatorship hand of rule here. I don't think that's right. Silicon Valley Bank did not go under because it was involved with crypto. Neither did Signature Bank. They went under because of bad investments by the leaders of that company. Have I bought? No. I would not buy Credit Suisse at all. No way. You look at that chart. When you look at a price chart like this, and I talked about this on yesterday's program, you look at a chart like this, and instinctively, your brain automatically will tell you this thing's cheap, right? I don't think there's anybody watching this right now that's not going to look at this price chart. I'll make it a weekly for you, make it even easier. Nobody here is going to look at this price chart and go, wow, it's really expensive. Your brain goes, man, it's trading at $2.16, and back here, it was 2007. We're at $77. This is Credit Suisse. I know the name. They're huge. Well, you know what? This thing could go to zero, even though they just got $54 billion. I mean, I personally think because of that injection, they'll survive, but I still am not buying it. I'm not that kind of risk taker. Some people are giving me a hard time for my JP Morgan, Bank of America, and my Charles Schwab purchase. So, we look at Bank of America. Well, I sold those $28 puts. I'm still in the money. Right, we'll see what happens by close of market tomorrow, but got the 28s on that one. I'll be fine. Collected, like I said, 1.8% interest on that one. You look at JP Morgan. I don't think that this was taking that big of a chance. Right, JP Morgan, I've got the $32 put, so I'm underwater right now, but not that bad. I'm not worried. I would gladly sell some calls against this one. The one that's doing really well for me right now on those three that I put in the article I wrote for barchart.com is Schwab. So here's Charles Schwab. I have the $50 puts right now. I'm pretty sure I won't get exercised. That was 6.98% rate of return for 5 days on that one. So, look, I'm happy taking risks. I'm happy taking chances. But when I look at Credit Suisse, this is way too big of a risk. To me, the chart says it's going to zero. Now, of course, they got $54 billion that will help them not go to zero. But whatever the case may be, this is not, let's look at the monthly here. This is not a story of, did Credit Suisse get screwed on this current financial crisis? No. Arguably, Credit Suisse has been mismanaged, misrun, or doing something shady for the past 15 years, 16 years. Since 2007, this thing peaked. It peaked right before the financial crisis and has never gotten back on track. So, in my opinion, move on, find something else. There's a lot of other international banks that, might be a better opportunity. But no, JB, I wouldn't do it. Now, could you buy and maybe expect there to be a bounce? There might be, but it's just a gamble I'm not willing to take with my capital. And again, that's where we all have to make our own decisions. This could have a huge bounce. I just don't know. I don't know, and it's not a risk I'm willing to take. Hope that helps. It's been paying fines across the globe for their fraud activities. Yeah, well, one thing I like, Drew, sorry, that wasn't Drew, that was Rajesh. Whenever you think one specific financial firm, you guys give me a financial firm, a bank or financial firm that you think is clean, man. This is a clean financial firm. They keep their nose out of trouble. They're straight and narrow. They're not misleading investors. They're not front running or manipulating markets at all. This is a financial firm that is the cat's meow, the bee's knees. Type it in the chat if you got anyone like that, and I will show you something kind of interesting. Credit Suisse is in trouble of being delisted. Yep. It'll reverse split, Kev. It'll reverse split for sure. What's surprising about this is typically, I believe if you're under $5 for 30 days, you're supposed to be delisted. But notice they've been under $5 going back into September of last year. So clearly, something when you're this big, you're too big to fail. Apparently, USAA maybe is maybe. But I don't know if that's a public stock there. TD Bank. Are you talking Toronto Dominion? I need a ticker symbol. Berkshire. Well, Berkshire, sure. Okay. I wouldn't see. Here's the thing, Tom. That's a good point. I wouldn't put Berkshire as a financial firm. I would put Berkshire Hathaway as like an ETF or a hedge fund or something like that. They own a lot of different companies. So I wouldn't call them a financial firm, but I see where you're going with that one. Cambridge Trust, huh? Let me see if I can find it. It's so bizarre. Something just happened to my, let's see real quick, MSFT. Okay, now we go back to candles. So Goldman Sachs. Goldman Sachs is probably the one that's in the most trouble. And here's where I was going to get at. If you go out to Google and just open up a browser and then just type in whatever name, so GS Settlements. Oops, I spelled it wrong. Let's go Goldman Sachs. Let me go Goldman Sachs, make it easy, right? GOLDMAN. Goldman Sachs Settlement. So you can scroll down here and find page after page after page after page of settlements from Goldman Sachs. Goldman Sachs charged a foreign bribery case. Goldman Sachs pays $3 billion in one corruption scandal. It goes on and on and on and on, and it's for every bank. Here in 2020, $2.8 billion for admitting wrongdoing. $79 million, no big deal. There's more, $12 million settlement. Okay. All these banks do this. It's just over and over and over. It drives me absolutely nut. I know, Indigo, it is the largest percentage of XLF, which is why it doesn't make sense to me. I mean, well, let's be honest. Berkshire Hathaway's holdings. Would you think that Berkshire Hathaway would be considered a financial entity? They own Apple shares. That's not a financial firm. They owned Wells Fargo. As a matter of fact, you can probably look out here and go to Stock Guru Focus, I think. I think it's Guru Focus has this whole page. It's really kind of cool. So here is Guru Focus. We'll go to Insiders. We'll go to Complete Insider List. And we'll look at Warren Buffett with the B. Go to W's here. I'm just bringing this up just for fun. Why not? Hold on a second. Let me just type in Warren. There's your Warren Buffett. That doesn't quite seem right. They've changed this site. It even has him, he's sitting right there. I still can't see it. Buffett Warren, Guru Focus, Guru List. Let's go to B for Buffett. Or Berkshire Hathaway. Let's see if it gives me here. I just want to see real quick. So it's Bill Ackman, so we got to go W for William. Let's see. Warren Buffett. Here you go. Berkshire Hathaway Incorporated. So just scroll down here. Taiwan Semiconductor. Okay, so that's not a bank. Now you notice that their second holding, U.S. Bancorp, Bank of New York. Then they got Activision Blizzard. They've got Chevron, McKesson Corp. Don't know McKesson. Louisiana Pacific, Apple, Paramount Global. These are not financial firms. So it's so bizarre that this is the heaviest weighting in the XLF ETF. I scratch my head at whoever's doing that. So you're right. You guys are absolutely right that Berkshire Hathaway is number one. To me, I removed it. I actually wrote about that in my article. I said, look, Berkshire Hathaway is not really a financial firm, even though they did invest in some financials. So that leaves us with JP Morgan's number one, Bank of America's number two, and XLF, and we can continue to go down the list. So if you ever think any firm in the financial world is clean and safe, just type in the bank's full name and type in settlements afterwards, and you'll just be mind boggled. So yes, I think they did reduce it. Let's see if they reduced. You can see there are a whole bunch here. They've actually reduced a lot. So here's reduced. I don't know if it's gone altogether, but they recently just added Louisiana Pacific, some more Apple and Paramount. They got rid of their Ally Financial. They got rid of U.S. Bancorp and Bank of New York Mellon. So, yeah. But I don't know how much they got rid of. Here it says they reduced 89% of their Taiwan Semiconductor. They reduced 91% of their U.S. Bancorp. Anyway, thought that it's actually a really cool site if you guys ever want to, see what different gurus are holding. It's kind of cool. It's one of those silly little things to distract us in our quest for information. So anyway, let's see. Geez, you're right. I just looked at TD Bank settlements. Oh, it's awful. And some of you might think that I make this stuff up and I'm a little bit harsh on financial firms, but I always use the analogy or the story of I can go into a 7-Eleven and I could steal a Snickers bar. It's worth $1, and I might actually get a citation. I could potentially go to jail for theft, right? But the way it would work if you were a bank is I can go into that store and I can steal that Snickers bar every single day. And if I get caught, Snickers bar is worth $1. I might have to pay a penny fine for it. And the guy won't even take me to jail. Just say, okay, pay your penny fine right now. Don't do it again. You're like, okay, no problem. I'll be back in 7-Eleven tomorrow stealing. And that's what happens with these financial firms. What should happen is if Goldman Sachs, and you can see right here, I don't know all the details of the bribery case, but I'll click on the top one here. This is from 2020. And it says they settled over Malaysia, 1 MDB scandal to lift dark cloud. I don't know what that is. But it says right here, Goldman Sachs agreed to pay more than $2 billion to settle U.S. charges of its role of the 1 MDB corruption scandal, lifting a dark cloud that has hung over the bank for years. Well, you know what? They need to go back through with an auditor and see how much money was made from that process. That corruption scandal, how much business did it give them? So if they made, let's say, $3 billion worth of profit from activities which were derived from that corruption scandal, then double it, and that's your fine. So now all of a sudden, Goldman Sachs goes, crap, man, if we get caught, this could really burn us. Whereas right now, there is no financial firm out there that can get busted, caught. They'll just pay a small fine without admitting guilt, and it all goes away, versus, hey, you know what? Somebody should go to jail for this. You're one of the biggest financial firms in the world, and you were involved in a corruption case. Somebody on that team needs to put some shackles on and go sleep with Bubba in a cell in an orange jumpsuit. Unfortunately, that doesn't happen. You have to incorporate first, right, August? Anyway, my soapbox, sorry. We definitely went down some tangents here today. My apologies. This stuff pisses me off, in case you haven't noticed, right? You can be as truthful and honest as you want about the trading and investing world, but then all you have to do is incorporate yourself, call yourself a financial institution, and you can settle without admitting any guilt. Unbelievable. Unbelievable. And not only be a consequence for the behavior, it should be severe, right? It should be absolutely be severe consequence. So if they know that you made $100 billion off of a Forex scam where you were manipulating currency prices and you made $100 billion, your fine is $300 billion, and someone goes to jail. Then all of a sudden you clean up that financial system. I'll ask you this. Why do you think that they don't get busted? Right? Why do you think that there's nobody going to prison for what happened in 2008? Why do you think that there is no major repercussions. So, when Goldman Sachs agreed to pay $2 billion, I'll bet any amount of money that they made a lot more than that off of that settlement. Why do you think that no one's getting busted? And I know while I'm waiting just a second of delay here for the feed, for you guys to type in. Exactly. It only happens to the little guys, not the big guys. But more importantly, when you look at what Goldman Sachs represents, it's this pinnacle of financial achievement. They are entrenched with people in politics all over the world. I mean, type in government Sachs in Google, and a lot of times you'll actually get a list of all of the different former executives from Goldman Sachs that are now working for the Bank of Canada. They're in Mexico and diplomatic communities and boards. So they've got connections, this web of say, political immunity. It helps them out. The other reason I think is, I'm going into some response here, because they fund the politicians. Bingo, that's a big part of it. Taxpayers are going to front the bill. Okay, political donations, great lawyers because they cut the deal. Someone gets a cut. Yes, so they can all keep getting paid. Good one, cronyism. I think all those are right, but I also think that a big part of it is the regulators don't want the punishment to be too severe because you need Goldman Sachs to help economic growth. You need them to be out there doing illegal activities until they get caught. I know it sounds horrible, but they've got to be out there doing stuff to help grow the business and grow economy. It's more money, more taxes, more revenue, keeps America growing. So I feel like the regulators need to just every now and again be like, okay, bad boy, you're bad. Stop it. You're bad. Just so that we, the public, go, oh gosh, they paid a fine. Good. God, they got caught. I think it's all corrupt. They go to Davos. That's a good one, John. Alan, individuals aren't legally responsible for corporate actions. I know. That needs to change. All right, sorry. You got me on a rant over here. So that was my take on the whole stimulus. If you look at the question that came in from Gene today, he says, with all the bailouts for banks, does this save them or hurt them? I think it saves them for now. At least this makes us feel a little bit better at this moment in time about financial firms, right? Because coming in Monday morning, I think we'd all agree that most of us were like, oh man, crap, this could be ugly today. Then all of a sudden you had the bailout of Silicon Valley Bank and Signature, right? The bailout of Signature. They didn't need a bailout. Then you have the monetary bailout of First Republic, and you have the monetary bailout of Credit Suisse. So that's calming the world to think that, hey, we got this covered. Trust your financial institutions. What must happen is reserve requirements need to go back onto the banks. So they say, okay, 10%, you have to keep 10% in cash, right? You can't be lending out all this because we just had to run on a couple banks. That's the first thing that should happen with post this to fix the problem. We haven't fixed the problem. We just put a giant Band-Aid on it. As John O'Donnell would say, you just put a small Band-Aid on a giant sucking chest wound. That's such a graphic visual. That's John O'Donnell's visual. I had to steal that one there. So to Gene's comment here, does it save him or hurt him? I think it helps buoy the market for a little bit. It stems the fear and the panic. I still think long-term it's going to cause problems. Why? Because you put all this capital injection into an unstable market, and now you're going to create more inflation. You're going to undo some of the things we've slightly fixed, and then problems still aren't going to be resolved. You still have banks that are making bad investments because the Fed has opened the doors through policy and the removal of provisions of Dodd-Frank to allow that to happen. So we haven't fixed the problem. It's kind of like saying you've got someone who just eats nothing but fast food all day long and they have a heart attack. Well, what they should be doing is going, and they go to the hospital, they get all the procedures done, everything's fine, and they go back home. What should they be doing? Gentle exercise. They should be eating healthy, away from fats and all these, bad foods. But instead, what's going to happen, because the regulations haven't changed, they're going to go right back to eating junk food again, and we'll put ourselves back in this problem. So hopefully the Fed does something here soon to fix it. I'm on delaying the inevitable, right? And I don't think it's necessarily inevitable. It's just the policies need to change right now, or then it is inevitable, right? You're going to let them do the same thing they've done before. Well, we're going to get the same result. So the policy has to change. Again, raising reserve requirements would be one major piece of that. Maybe you raise the reserve requirements up to 20%, but you also increase the FDIC limit to 500,000. That gives people more confidence in the system. Anyway, we could do I haven't talked to John quite a bit either. He was in my crypto class yesterday, so it was fun. So I think, Gene, short term, it's a fix of confidence. Long term, I think it may actually be creating more problems. So I'm actually fine buying right now, which I may get executed tomorrow on my JP Morgan. Right now, it looks like I'm safe on my Goldman or my Bank of America and my Schwab. But if I could put my shares of JP Morgan tomorrow at $32, fine. I'll sell calls against that one. I think we're okay for a little bit, but I'm a little more nervous about, let's say 6 months out. Where do we go? And obviously the major focus right now is going to be on what Jerome Powell says on Wednesday. That's really the big wild card. Now all of a sudden expectations are just all over the place, from cutting 50 basis points to raising 50 basis points and anything in between. It's kind of nuts. Now let's look at what the adjustment was for today with regards to the FOMC. Right now we're at 4.75. Yep. So it's in line with my expectation. Expectation is we're going to jump 25 basis points. It looks like there is almost an 80% chance of the CME or the Fed raising to 5%. So a 25 basis point increase. So that's changed a lot since yesterday. Yesterday was 54%. Now it's 79. So looking good. And I think that's what will happen. Don says remove brokerage from banking operations. Yeah, but you can say, let's separate these two buildings, but they'll just build a corridor between the two and still talk to each other. I don't know. Take a survey? What do you want a survey of what they're going to do next week? What I should do, Lisa, is I'll do that in tomorrow's show because I have to take me some time to type that in. If that's what you're asking, is to do a survey on what the Fed's, what do you think the Fed funds rate will be? I'll put that in a survey tomorrow. It's going to take me too much time, and I can't. Typing in a survey while I'm trying to talk to you guys makes things a mess over here. Let's see. Do I have another question? Good question from Mario. I'm not sure on this one. It says, does the insurance cover all account holders who have cash in banks, or is that only for U.S. citizens? I don't know the answer to that one. What I'm going to say here, and again, this is a trust but verify. I don't know this one, but I'm pretty sure that your deposits are, because you're still going to be using an address to open that account. And by opening the account with whatever documentation you have with a registered FDIC bank, that those deposits under $250,000 should be. I believe that they're going to be covered. So, hey, Kev, thank you very much, man. I wish I had a cocktail with me. This is not going to do it justice. I know it's not going to do it justice, but a little cheers from In-N-Out for you. Thank you so much, Kev. I appreciate that. Made my day. Oh, okay, great. Well, let's do this. All is my guess. All right, so let me try to do it. It's gonna be tough for me to do this one. Let's go out here and start a poll. And let's go. Will the Fed raise? Let's go. Or will the Fed? What will the Fed move be? How about that? What? See, doing this live is just tough. What will the Fed decision be? So I'll leave that right there, and I am going to put 4 different options on here. We're going to go drop 25. We're going to go even, no change. We're going to add on an option that says plus 0.25. And I'll add the 4th one, which is plus 0.50. I don't think that we're going to see, there you go. There you go. There's your poll. Thank you for the suggestion. Sorry that I had to do it. Took me a little time to do that one there. But what will the Fed decision be? Drop 25 basis points, no change, increase 25 basis points, or increase 50 basis points. Now, I don't think that dropping 50 basis points would be on the table at this point, but maybe it's on there. Are there some strong regional banks? I'm sure there are, Margaret, but unfortunately I don't study that, so I don't know that one. Let's see. I've heard talk of a full reserve banking almost sounds unrealistic. Yeah, that would never happen in America, but there might be some banks that are full reserves. And then you got to ask yourself, well, if you're a full reserve bank, meaning customer deposits $100,000, that $100,000 is sitting there, how is that bank going to make any money, right? What they'll probably be doing is buying short-term treasuries, right? Buying 3 months, 6 months out, and keeping some money in cash and keeping the rest in those short-term and generating. So the interest rate that you would earn at that bank is going to be probably zero, right? It's just knowing your money is guaranteed and safe. So that would be kind of cool. Full reserve, all right, I'm fine with that. I think that there should be, it's kind of humorous. I was laying in bed last night thinking, I'm tired of all of these lying, cheating, scandalous banks. I mean, I think the guy from Silicon Valley Bank was making like $20 million a year salary. Well, what do you need to say this is enough money? Like if you were making $500,000 a year, would you say, I'm great with that salary, right? Even in California, $500,000, it's not poverty. You could start a bank where you did full reserves and didn't take any risks, just buying short-term treasuries, really short-term so you can't get burned on the rate exchange, and invest 100% reserves there and not get burned and probably still be able to pay yourself a $500,000 salary per year. Are you going to be the top 1% making tens of millions a year? Probably not. But who cares? You're doing something good for society. You're creating a bank that's stable and secure. It's like, how do I do that, right? I actually would be very interested in doing that. It's not about making the money. Obviously, making $500,000 a year would be fine. It's great. But it's about knowing that I created something that's safe and secure. And I'm willing to bet you that you would get a ton of business. You would get a lot of people coming to you saying, hey, we'll keep our money with you because we could make more interest at another bank, but we know yours is safe. And that's what's more important to us. That my money, and if anything right now, this should make depositors nervous if you have over $250,000 because this is the one-time bailout. I don't think you're going to see this happen again. I never say ever, but probably not going to happen again. This is a wake-up call to anybody who's got a lot of money. Think about where you keep your money. If you're going with a company that's very into VC and startups and things like that, that's a lot of risk. If you're going to something, your Bank of America, Wells Fargo, not that it's risk-free, but they're spread out into so many different businesses, they're probably not going to hose you. Now, granted, those are massive organizations that have huge overhead. Shrink it down. Most people don't use ATMs anyway, so I don't need a physical location. Just do it all online. Anyway, I'm ranting. Can you include an additional survey of what we want the Fed to do with it? You can type that one in there, Dave. Let's see what the final result here was. And I'm going to end the poll. So it started off real quick. I saw all of a sudden everyone was saying no change. I've got increased 25 basis points. 80% of you guys said that's the winner. That's been my call for a while. I think that's where we'll stay at 25 basis points. Again, the Fed would make themselves look unconfident or unsure of themselves if they were to flounder and change their rates very rapidly. Remember, we went from 75 to 50 to 25. Now you'll pace yourselves at 25 for a couple of meetings and see how the impacts are on the economy. So I'm right there with the majority here. It says 25. Let's see. All right, what else we got? Did member banks get assistance and now low interest money from the Fed for the bailout? No, I don't know if all banks got some money from this. I know that it was predominantly saying we will bail out those deposits at Signature, we'll bail out those deposits at Silicon Valley Bank. Other banks, I haven't heard about that, but there probably are some other banks that are going to start to see some financial trouble, and there may be funds available for those banks. A pause would be considered a pivot. Yep, I agree. I think a pause would be considered a pivot at this point. I don't think the Fed wants to show that hand, especially because Jerome Powell has been saying over and over and over and over and over again, we have to be more aggressive. I'd much rather raise rates and be too aggressive than not raise and have this whole thing start up again. So it's 25 basis points. I'd wager on that one. Looks like the rating agencies failed to call this fiasco ahead of time. Margaret, did you do that just to jab me in the side and prod me to go on another rant? Is that what you did right there? Rating agencies are the biggest cons out there. If you believe in rating agencies, Moody's, Standard & Poor's, you name it, just watch The Big Short. Watch The Big Short, and that opens your eyes to, again, cronyism, the manipulation that happens where you can pay Moody's to give an upgrade on something. And here's a couple $100,000. How about you guys be very nice to our bond rating, lift us to AAA? Oh, how much? I'm gonna need $1 million for that. Boom. Okay, great. I don't trust them at all. I absolutely do not trust them. It's like a crooked doctor. I would not trust their advice because they're probably trying to sell medication from some other pharmacy. No way. I don't want it. J. Powell's not afraid of Liz Warren. No, he's not. Boy, I'll tell you what. Those discussions between the two of them, Big Ed, were pretty funny though. Elizabeth Warren, geez Louise, she's just crazy. All right, I'm gonna wrap things up here. I gotta go. I gotta get some stuff done. I love it. I could just kind of go on and on and on and on. Real quick, let me finish this last question. Actually, no, Tom, I'm gonna save your question about the Russell for tomorrow. Give me something to focus on and do a session on. He was asking about yellow boxes and scans for my yellow box types of setups. We'll talk about that on tomorrow's show. So let's look at what's happening. Economic calendar for tomorrow. Here is what you got cooking. The really only major stuff is this capacity utilization and industrial production, but it's not that big of a deal. So I don't see anything major happening for your Friday session. It might be that calm before the storm. Hopefully things just relax just a little bit. Just relax. If you want to look what happened out there today, here is your info for today. Obviously, the markets and the headlines were the European Central Bank shocks the market with 50 basis point increase. Oh, we were talking about shocking. That was what was forecasted. I mean, everybody thought that they were going to come out at 50 basis points. So why is this a shock to the system? Anyway, they raised 50 basis points. No big deal there. For the U.S., you had a decline in unemployment claims, which is good. You also had the Philly Fed Manufacturing Index come out, which was very negative. Now, that, of course, is the same thing we saw with the Empire State earlier this week. So we've had two different regional areas, New York and Philadelphia, coming out with their manufacturing numbers. Both of those have been rather negative, below zero, so not a very positive piece going forward. So I had two questions here. One, Microsoft stock, Mr. Softy, as Mike McMahon calls it, MSFT. There's your Microsoft, looking great. Now, where are we? It's the same pictures you have the NASDAQ, right? You have this really big run-up into overhead supply. So keep your eye on this one for tomorrow. I mean, the momentum on this looks so strong, like it could just rip right through. However, you're right at supply. You're right at the peak of supply as well. All in all, Microsoft is looking good. It just looks like it's ready for a little bit of a pause at the supply zone. And you've got almost what we call a layer on layer, because right where it's at 276 is kind of the peak of this supply zone going back all the way into February 9th and 10th. But notice right above it, you've got another one that goes all the way up to 280. So there's definitely some challenge ahead here for Microsoft, but the momentum right now and the way things are moving, it could easily rip up through there and break that to the high side. What else did I see? RUT. You want to know about Russell 2000? We started off that one. Not a lot there to say with regards from a technical perspective. I actually kind of drew on which looks like a bearish pennant formation, which is a strong impulse down and now a little bit of consolidation. That's really all I got. That's all I got to say about that. Yeah, I think so too, Oliver. I think that there's a pullback coming. It's just really, people freaking out and having such a great day today. I think you're caught in the euphoria from what happened with Credit Suisse and from First Republic. That to me is what I think happened. And Margaret says same with Apple. You got a lot of this tech stuff is looking the same picture. There's AA, Apple, right? Now this actually looks even better. It looks like almost like an inverse head and shoulder, right? Little shoulder right there. There's your head. There's your shoulder. Boom. I mean, this Apple looks better than the other ones. And that line that we've had, I did not modify this line. It's been there. 157.38. It's a price we hit back in September of 22. It's a price we hit back in October of last year. It's a price we hit back in February. And here we are hitting it again. So NQ almost a golden cross. I don't have those averages up here. Let me see real quick. Since you mentioned it, let's go and throw on. Oh, I have one moving average. Too much time to put on the second one, but can't wait to short NVIDIA, being patient. Man, I'm long-term very bullish on NVIDIA. The whole research I did on that AI article, man, I think NVIDIA is one of the main plays for AI going forward. So careful with that one. But all right, that's going to wrap it up for today, guys. I could keep going, but I have way too many other things I got to get to on the personal thing side of life. So again, I hope you enjoyed the show. As Liz says, hit that, or Lisa says, hit that like button if you liked it. If you didn't, if you hated it and you want to curse me out, do so. Just do it to TraderMerlin@gmail.com. Let me know what you don't like about the show or what the problems you have with me, and I can maybe fix some of that stuff. Or you can just put your comments down below any of the YouTube videos at TraderMerlin.com where you're watching this one right now. That said, hope you guys have a fantastic remainder of your day. I got you a 45-minute show today. I'm cut back 15 minutes from our regular hour show. Damn you, Big Ab. Guys, have a great night. I will see you tomorrow for our Friday show with a glass of whiskey. Take care.